What's going on, everyone? Welcome to another episode of the Remote Real Estate Investor. I'm Michael Albom, and today with me I have Neil Timmons, who is an author, podcast host, entrepreneur, real estate investor, and he's going to be talking to us about going from an agent and employee to building a significant business in the real estate space and what it takes to do so. So let's get into it. Neil Timmons, what's going on, man? Welcome to the podcast. Thanks so much for taking the time to come hang out with me today.
Dude, it's so good to see you again. I appreciate the invite. I'm looking forward to this for some time now.
No, likewise. The pleasure is mine. I'm super excited. So you and I, of course, know each other. We were chatting offline just before we hit record. But for anyone who doesn't know Neil Timmons, give us the background, quick and dirty, who you are, where you come from, and what is it you're doing in real estate?
High level, out of Des Moines, Iowa, born and raised. Started as a residential real estate agent. Built a brokerage there. Owned a Remax for a number of years. Was a top Remax guy in my 20s, and then eventually found my way. Stumbled into investing. Worked my way through single family investing. We still do a little today, but morphed into commercial investing, and that's a primary focus today.
Love it. And I hear this theme so often with agents. Started as an agent, got my teeth cut, then went into the investment side. My guess, if you're a top performing agent in your local market, you're making a lot more money on an annual basis than you would if you're investing. So why did you make that transition? Why did you make that jump?
Yeah, no, good question. Well, the not so fun story is I was probably 31-ish at the time. Maybe 32. I came home one day to my wife of a decade and our three little kids, all about 5 or younger. And my wife had them all packed up and said she was leaving for good. I had spent the better part of, 7 years or so working like a dog every day of the week. I worked. My second year in real estate, I worked 355 days. So that business was built. Ultimately, I was able to put a team in place on that business, but it largely was built on my back and my effort. And so it was that point that, I had an ultimatum, and I begged and pleaded with her to go, you got to give me an opportunity. I understand. So give me an opportunity. She did. Thank God. 45 days later, I sold my Remax, and took a whole bunch of time off to decide how am I going to do this? How am I going to make a living and contribute? Because I liked doing what I was doing, and not to the degree in which I did it, but I enjoyed real estate a lot, right? The people, all the fun things around it. So I took some time off to evaluate things and then ultimately plugged back in largely on the investment side.
And today you own a business around the real estate investing space. Tell us about that.
Yeah. So I own a couple of things. On the investment side of things, we're primarily focused on commercial investing, right? So we buy multiple asset classes here primarily out of Des Moines, Iowa. We still do fix and flip in the office, although I'm not largely involved. We've got a nice little machine that runs that. A really good contractor base in place, literally the same contractor. Don't quote me on how many, but we've done probably nearly 200 with the same exact crew. So it makes running things and the efficiencies thereof awfully simple. I love talking to people going, you know what? I don't like flipping because then I got to go pick the carpet and I got to pick the paint and whatever else. I'm like, what do you mean you have to do that? We picked it once. It's the same carpet, it's the same paint, it's the same countertops, it's the same appliance. Nothing changes. You're not doing a whole block of these things. It's not like anybody notices. Right. So you just pick it once. Yeah. And so then also I run an education business, which we launched this year, which has been very well received from folks who want to make that bridge, want to leap into commercial real estate and, figure it out either how to do their first deal or how to do their next deal.
And I'm curious, Neil, because I also come from the education space, and the folks that you're working with, are they the DIYers or are they the folks that have heard of commercial and want to get exposure to it in some form or another, or a mix of the two?
Yeah, no, it's really DIYers. Yeah, that's not largely the passive investors, if you will. It's people who are active in real estate, like yous and me's, if you will. And my career, as I just laid out, was cradle to grave, if you will, coming through. Like if you were to go, how should someone progress? Although most don't do that, they end up in one thing and often stick there. But I kind of worked my way through that. Is a constant evolution of how do we elevate oneself and one's skill set to take it to a new level. And that's where these folks are. They know they've done single family. They've largely been exposed to it. Maybe they've been exposed to a little commercial, but they just haven't gotten to the results. They're not on a foundation of legacy. They're not on a foundation of financial freedom. And, arguably, in my sense, that commercial can get you there faster and easier.
And within commercial, because it is such a diverse asset class and really name, where do you see folks going that are having the most success?
Oh, good question there. We bring people in and we do a lot of things from a training standpoint. One of being an asset class exercise to go, all right, well, fill this little asset class matrix out. We have my answer a handful of questions to go, do you resonate better? Would you rather work with people or businesses? And we just bring them through a series of questions, and that lines it up to go, well, top to bottom ranked. We focus on six of the largest asset classes. Is top to the bottom. Here's what it looks like. And then my encouragement from there is, listen, if number 2 resonates a whole lot better with you than number 1 on that list, that's what you should do, because it's just easier. And you know this. If we were to go work on something you can get passionate about, it's a whole lot simpler to then put a little more effort into it than something you're just like, maybe.
Right. Totally. And Neil, I'm curious. So many folks, I think, can go invest in single family on the side as a project, as a test, as an experiment. The DIYers that are doing commercial real estate, are they doing it on the side, or are they really jumping in with both feet, kind of like you did, and making this their full-time gig?
Yep. No, great question. Most are doing it on the side. Most are either stacking it on to their single family business, or, if they've got a day job, and several folks do, is they're doing this, in the evenings, nights and weekends, side hustle, if you will. And you think about, make up a number. If you were to go market to single family or market to commercial, just by being in commercial, the number of available prospects has been largely diminished. It's a much more manageable group of, make up an asset class. Let's say self-storage. You're going to go market self-storages in your county. Well, in comparison to houses, it is a mere fraction. So your ability to call, text, or, mail somebody or connect with a broker, perhaps, it's very manageable. You don't have to do it full time. In fact, I would not encourage it, because you're going to sit around. You're going to get discouraged because there's candidly not enough to do. Versus a single family side, you can always find something to do.
Interesting. Yeah. Talk to us about kind of the exits and the thought process around the exit from that business. Because in my mind, and I think in a lot of other investors' minds, a house is a house is a house. You know what it is. I know what it is. Everybody on the street, that you bump into knows what it is, right, and knows how to buy it. Versus a self-storage unit, I could maybe name one person that I know that's involved in that business. And so if I'm trying to sell it, who's going to buy it?
Yep. No, exactly. So that's, what I do on the training side is bring people through, even if, largely set some goals, understand why you want to be in this business. And perhaps what you'll do, get through the training and go, I don't want to be in the business. That's okay too. Yeah. That's okay, because what you don't know, or what you now know, empowers you, right, to make a better decision about the path you should be going down. So we bring people through that, largely through some free training to expose them to what this world looks like, and then how to, identify an asset class that really resonates with you, how to price something up, how do we get leads. So largely from a marketing standpoint, from a lead standpoint, what do we say? Then how do we value it? How do we actually put something, a price to it to go, all right, this looks like a potential really good deal. Then how do we put it under contract? And then from there, the exit plans largely are we going to resell the property? Occasionally we get a property that comes in our wheelhouse, what I call, it's not our perfect seller. It's a good deal, just not for us. Now, how can we move that along? So to liken that to single family, wholesale it, double close it, novate it, right? Do all the same things in the commercial side. Or, we decide, hey, this is our perfect seller. This is a property we want to own. So how do we close it up? Are we going to raise equity? How do we go get debt? And then how do we bring the whole thing together to properly manage it? And so that's what we show folks how to do. And it largely starts, on the front end of the process to go, all right, how are we buying this? Because I know what our required returns are. And if it doesn't hit that, that's going to lead us down a different path to either go, it's either a non-deal, or we're going to get this moved along to another investor and cash a pretty big check that we can utilize for the next deal.
Yeah, that makes a ton of sense. And you used a term that I'm not frankly familiar with, novate. What does that mean?
Novation this has become very popular on the single family side. So there's a lot of buzz on the single family side, especially for those in the wholesale end of the business.
Okay.
It is to replace one contract with another contract. So essentially, if I was to, say for example, I was to buy a property from Mr. Jones, I have a contract in place with Mr. Jones. I decide I want to move this property along under a novation process. You would then provide me a contract that would replace mine. There's typically a difference in pricing, right? You're going to pay more than what I've just paid, and that delta ultimately gets paid back to me as part of the process. I'm high level in here. There's some moving pieces to execute that, but high level. Yeah.
Okay. Great to know. Neil, I'm curious if we can zoom out for a little bit, because you went from realtor and agent, which is a kind of a unique profession in that, yes, you are an employee, but also you are kind of the business owner, of your own little business, your own little domain. And then you went and put a team in place, and then you ultimately sold that business. But for so many people that are employees in a traditional 9-to-5 W-2 employee position, to make the transition from employee to business owner, I think is a big leap for a lot of people. What was that like for you mentally, going from I'm going to be an agent to now I'm going to start and run and operate a business?
Yeah, no, good question. And I think it comes in incremental gains, right? So how do you eat an elephant, right? One piece at a time. And so the same thing occurred from me mentally. And I think it's a terrific question, because I think so much of this business in business in general is mental, right? It's a 6-inch game in between your ears. And so how do you combat that? I read a book when I was probably, I'm 22, 23 years old, The Millionaire Mind by Dr. Thomas Stanley.
Okay.
He wrote The Millionaire Next Door. That's probably his most famous book. But The Millionaire Mind was incredible. And it broke it down to, how do millionaires think? And my thought process, of course, is, well, if I can just think like a millionaire eventually, and then therefore act and operate like a millionaire, I will eventually become one, right? So it's not hard. Success leaves clues. So there was a lot of things in there that impacted me at a very deep level. And one of them, the biggest takeaway for me, was the largest risk that one has is being an employee. They can let you go any day of the week. This is what I came to believe, and it's still my operating belief today. The largest risk you have no control. And I am well aware that as a business owner, as an operator, as a real estate investor, we take tremendous risks. There's no doubt about it. But I still think they pale in comparison to putting all eggs in one basket, and that of an employer of someone else.
Yeah, it makes total sense. So as you started moving things along and created and formed and founded your business, how did you figure out who the right people were to put on the proverbial bus? Because I think, again, so many people have either a great idea and they're really good at maybe doing that one thing, but doing that one thing isn't a business. And so how do you scale it and have a proper functioning, running, operational business?
Yeah, no, great question. And that's probably, if I was to attribute any of our success over the course of the last 3-ish years, 2.5 years, somewhere in that range, we've had significant success in that period of time. It's largely been correlated to my evolution as a leader, knowing that the only way forward is ultimately with and through other people. And so I've had to focus internally. So go back to a question you just asked earlier, from a mental attitude of taking that leap. For me, it's how do I develop as a leader? How to become a better person, somebody that people look up to, somebody that people want to be around, somebody that people want to listen to, and be on the same bus with, rowing in the same direction. And so that's been a big focus over the course of the last couple of years. When I was at a spot where I was going, all right, it's time to grow. You can't hire and retain A players, unicorns as I call them. You can't hire and retain unicorns if you're not one. So how does one improve their personal self to be able to get to that level that other A players want to be around?
Yeah, that makes total sense. And so what did you do? Can you open the vest a little bit? Let us peek under the curtain.
Yes, I wish there was a silver bullet here, but it's largely just been, what do they say? What's mentionable is manageable. And for me, it's just having that cognizant thought that, now I'm mindful of this. And so now I need to give thought to this. How do I say things? How do I handle things? How do I handle certain situations? What is the impact when making a decision with an employee or with a team or with a customer in front of folks? How's this going to resonate? What does this look like? And then having the vision as a leader as any leader does in any organization, that vision to go, where are we going? And this isn't about me. This is about us. And so oftentimes you'll hear me say, we did this. I try very hard to say that 100% of the time. I didn't do anything. We did this collectively. All the results are collective, right? It is us together. And at that reading, continuing to stay focused on that, stay ahead of what's transpiring, trying to, hosting a podcast, being around other people like yourself, other people in the industry, having an understanding of what's going on. So trying to be on that curve from a knowledge-based standpoint about what's transpiring, that's helpful too.
Yeah. Yeah. I love that. And asking for a friend. I hate people and I don't think I want to interview people and screen people and that sort of a thing. Does that mean that I shouldn't start a business with my great idea?
Oh, the first part is I don't like people. So let's just call that the introverted, right? They don't want to interact with other people. My right-hand gal's an introvert. She's not very gregarious as it relates to people. She's very good with people, but she's far more task-oriented about how do we execute on what we're doing. Mm-hmm. I think that's terrific. And now what had me hire her? Because she's the yang, right? It's yin and yang. She complements me in a perfect opposite fashion. And I do the same thing the other way around.
Yeah.
I think that's terrific. I think it's wonderful. If you can, what you just expressed was, who you are. If you know who you are, you can identify a path forward. And I would encourage you, absolutely. Knowing what your deficiencies are is wonderful. We're all given strengths someplace. Just balance your weakness with somebody else. Don't try to, don't master in the weaknesses, right? So anytime we have a weakness here in anybody, largely for me, it's going, just don't do it. Don't master in the minors, because at the end of the day, you're it's still going to be a D- for you, no matter how good you get at your weakness. Focus on your A's.
Yeah. Oh, that's such a good expression. I can't tell you how many times I've heard people say, "Oh, I went into business with my best friend. We're so similar." Da da da. And I'm like, that doesn't sound like a good partnership.
No, it sounds like a great bar night, but not a good business decision. Yeah, I know.
Totally.
Yeah, right.
Neil, if we zoom back into the commercial side of real estate coming from the single family space, what is it that you see as the biggest hurdle or barrier to entry for folks that want to make that leap into commercial, but utilize someone such as yourself to help them get there?
You'll never guess this. Are you ready for this?
I hope so.
I know you are. It's a mental barrier. It's all made up in their head. They don't think. They can't. Yeah. But they don't think. That is it. Because past that, the ability to go, if you've ever, let me liken it to single family. A duplex is like a single family rental house, right?
Right.
It's just two doors and the numbers change a little bit. Well, a 20plex is the same thing. There's not much difference in these things. You're adding some zeros, you're going to calculate it a little differently, but it's pretty much the same. In fact, management, in my opinion, gets easier. The more doors you have, right? You get professional management, it becomes simpler.
Yeah.
And then to make a change to go into some other asset class, we just have to make a bridge, right? What does that look like to have to go to, an industrial buildings on a triple net lease, which is probably the simplest thing to calculate and get one's head around when you're going, well, they just pay you a lease rate and then they fix all the stuff that goes wrong with it. That's it.
Your true NOI is the rent.
Your true NOI is the rent. We've got multiple properties like that, and we're the management company, which means we just get the rent and never hear from them. Yeah,
that's by far the easiest piece of property in my portfolio is triple net.
Yes, correct. But people are, we're scared about what we don't know. And that's true of all of us, right? We're just scared about what we don't know, afraid to make a mistake, which is totally understandable. And so we just help folks. We educate them as we go, answer questions as we go, and show them the exact path to be able to get from, I want to learn more about commercial real estate. I'd love to be able to buy a deal to actually get to a closing.
Yeah, that's awesome. And I'm curious, Neil, what's your favorite asset class and why?
My favorite asset class, although I'd have to calculate up 4 or 5 different asset classes, but my favorite today is going to be in industrial.
Industrial. Why is that?
Industrial. Yeah. Industrial is in demand like crazy. Second, in 2021, had the second largest rent increase across all asset classes, only trailing to apartments. But in comparison to apartments, they're far easier to manage, right? You get a triple net deal or a double net deal, there isn't much to do. There's very few moving pieces. You end up with, on average, let's say a 5-year to 10-year lease. It's pretty straightforward.
Okay.
Yeah.
So if I'm playing devil's advocate here and we're looking at this industrial building, this is suited only for a business. This is not for people can't come live here. Correct. And the type of business you might have to build to suit it out for that particular business. 5-10 years down the road, that might be a future Neil problem, but let's drive down that path. Yep. That tenant leaves, goes out of business, what have you, economy turns.
Yep.
If businesses aren't doing well in the area, are you stuck with this vacant building now?
100%. If businesses aren't doing well in the area, meaning they're laying off, they're not employing people, my thesis is you still have an apartment problem relative to occupancy and or rent rates. This goes back to our earlier question is, admittedly, we have to take a risk someplace, right?
Right.
It's just my comfort level. And I like the box, not a somehow engineering building that's been added onto or defined for one person's exact use. I like a big giant box. Just a rectangle, that's it. A business of multiple businesses could come into that and fill it out any which way they want to. I also like the fact that if I can buy, my preferred buying is we're buying something older. I'm not buying brand new stuff. Buying something older, buying something with a value add, or I'm buying at a discount of some nature. So the intent is to buy it correctly. And if I can buy a property, let's call it, make up a number right now, $70 to $80 a square foot. Brand new construction is going to be $120 to $130 a square foot. I think I'm sitting in pretty good shape over the course of coming years. I think that my dollars and my rent rates get pulled up to the fact that sheer cost of new construction is going to be 60% higher.
All right. I dig it. And for anyone, I'm just realizing now, some of our listeners might not be familiar with the term double net, triple net lease. Can you give us a quick definition of what it is?
Yeah, it just defines what people pay for. And double net, for example, is probably one of the least likely terms that use. But let's say triple net. Triple net means ultimately that the tenant pays for everything. There may be some nuances inside the lease, but taxes, insurance, repairs, maintenance, the tenant pays for that. So if your lease is $100,000 a year, your net is $100,000 a year before your mortgage, any sort of debt payment you have on it. A double net means they don't pay for everything. They pay for perhaps taxes and insurance, but not all the repairs and all the maintenance. And therefore your NOI is going to be a little lighter depending on what you have to maintain and pay for.
Okay, perfect. And I'm sure some of our listeners are hearing that and thinking like, this is the best thing since sliced bread. I'm going to go put all of my single family homes and all of my apartments on triple net leases. Why is it only a thing that's been heard of in the commercial space? Yeah,
no, good question. To liken it to single family, you're like lease with an option or a contract sale. That's probably the closest thing you get to a triple net in the single family house side, right? Say you contract sale, that contract buyer is now responsible for everything associated with that house, right? And right. That's what it looks like. If you looked at the closest thing, there's some differences there. Obviously, a contract sale ends up with down payment interest rate that's not the same as a triple net lease on the industrial side. But that's probably the easiest way to liken it to single family.
Yep. Yeah, that makes total sense. And for anyone listening, like Neil mentioned, it's just the cap rate is like the easiest thing ever, and the NOI is the easiest thing ever. If you got $1 million building, cap rate 6%, they're paying you $60,000 a year. Bim, bam, boom, end of discussion. You're not paying taxes, you're not paying insurance, you're not paying repair and maintenance. So you can calculate your true return and then look to calculate what your debt service payment's going to look like and determine what your return looks like after that. Versus the traditional single family rental or apartment or traditional residential space, they pay you a set fixed amount, the rent, and then you have to go figure out the taxes, insurance, repairs, maintenance, CapEx, that sort of a thing.
Yep. So, hey, just because I like it or, and other investors like something else doesn't mean it's right. There's only what's right for you.
Yeah. Yeah. I love it. Neil, this has been so much fun, man. I want to be very respectful of your time. Let's get you out of here. But before we go, where can people reach out to you, find out more about you, continue the conversation if they're interested?
Yeah, no, great question. Well, if you want to learn more about commercial real estate, getting rich in what I call the 20X niche, why do I call it that? Well, because our target internally is to produce a monthly return that's 20 times out of a single family return. So we're scaling up largely is just go to my website, give you a free download, free report. Just you can learn more about the industry and getting into commercial. So
Awesome.
www.legacyimpactpartners/gift, GIFT, legacyimpactpartners/gift.
Right on. Thank you so much. And before I let you go, I mean, I'm not going to let you out of here without mentioning your podcast. You're also the host of a podcast, which you were kind enough to have me on. What is that called, and what can people expect to hear on it?
Real Grit is the name of it. It's about the trials, tribulations, anybody from real estate. So we talk about single family, talk about commercial, talk about everything in between. But really, so that we fully admit that, life isn't all about Lambos and big houses on
cash and checks
and everything on Facebook or social media, wherever you'd see it, right? That there's ups and downs. We have to go through stuff, and many times to be able to find our own personal success. And so we talk through that and people's personal stories and how they got there, because a whole bunch of people, they get there different ways. And it's really exciting. We get into some really interesting, very dynamic conversations. It's a lot of fun.
Love it.
And you and I had a great conversation.
I had a ball.
It was a blast, man.
Awesome. Well, definitely go check out that podcast, Real Grit. A lot of fun, really cool stuff going on there. Neil, thank you again. Any final words, thoughts for our listeners?
No, you can find me, like I shared at the website. I'm also on all the social media platforms. Facebook's the best place to find me. Neil Timmons. There aren't many of me. Just spell it right. You got me.
Right on. Well, hey, thanks again, Neil, for coming on. Appreciate you.
You bet.
Chat soon, man.
See you soon. Bye-bye.
Bye. All right, everyone, that was our episode. A big thank you to Neil for coming on the show. Really, really interesting stuff that Neil's been through, seen, and experienced. As always, if you enjoyed the episode, we'd love to hear from you with a rating or review wherever it is you get your podcast. And we look forward to seeing you on the next one. Happy investing.